Welcome to the Be Battle Ready podcast, where we take a deep dive into what it takes to be battle ready in your lifestyle and in your business, so you can go to war on your life and the marketplace and win.
All right, welcome to the Be Battle Ready podcast. I'm on with Chris Prefontaine of Smart Real Estate Coach for the second attempt of today. Those of you that are listening to the audio, we started and we got interrupted with technical difficulties, so we're starting all over again and going from there. But that's just how this stuff goes, right? Chris, welcome on to the show.
Thanks, buddy. Thanks for having me again.
Yeah, how about you tell everybody a little bit about yourself, like what you do, where you come from?
Yeah, so we operate a small family business here in New England. We buy and sell property only on terms. We'll talk about that a little bit later, but it's my son, Nick, my son-in-law, Zach, who I know you've met, and we then take that same exact technique or niche and bring it to all over North America. We have about 80 or 90 students actually doing deals, so we get in the trenches with them and get it done.
Awesome. Yeah. And I've had you, it's just like, we can call this episode round 2.5 for you.
Yeah.
And then I've also had your son and your son-in-law on the show. So it's been really great. Both different topics, but it's been a great time. So, today I want to put the focus on the show of real estate investing in uncertain times. Everybody's aware that, we're in these uncertain times and, real estate in itself, what's happening seems like it's disconnected from reality. It's like bananas. I've had 3 relatives sell their properties. One of them in Ohio that went for over 10% of ask, which is crazy. So I just want to dive into that and, kind of focus on today. So, where do you think this is all going?
Well, I think as you and I were talking kind of pre-show, nobody knows, first of all. So you can, you get the economist, the one-handed economist where they go, on one hand it's this, on one hand it's that. Nobody knows. So I was saying to you earlier, you get the fight or the flight kind of reactions, but unfortunately in a lot of industries, including real estate, you have the freeze too. And there's no reason to do that. If you can buy on terms like we do, there's no reason to freeze and say, I got to wait till the market crashes, or I got to wait till the market does, because you're going to be waiting for a long time, potentially, right, with the COVID stuff going on. So if we can buy on terms, we can push the terms out long enough. There's your insulation. There's your recession-resistant model. For example, our office building, we bought that on 20-year terms. So I really don't care. I don't want to sound disconnected, but I really don't care if the market has a few blips in the next 5 years even. It doesn't matter. So the answer is longer terms to be careful.
Awesome. Yeah. It's like if you're playing hot potato with flips and short-term investments, then, it's just hot potato, right?
Not good.
The potato, you're in deep water. I know of, used to be in your space as far as the coaching consulting in real estate years ago. He's just said, hey, it's a tidal wave coming because, the Q2 report came out and said on a projected basis, right, it was 32% down in GDP. On an actual quarter-over-quarter basis, it was a 9% drop in GDP. So how do you feel how's that going to affect that short months, how we are? And the thing with this is that everybody is affected in the world. So it's not like 2008 we were, everybody was affected, but in different ways. But
I agree.
We have a crash and it's just solely isolated, and that's obviously we ripple across the world, but everybody was affected. So how do you think this is going to play out?
Well, one thing I think we can be certain about is the banks are tightening up, right? Because whatever you just said, they're panicking because of it, and they're only going to get worse and worse. So what does that mean? It means the buyers can't get financing eventually. Right now, there's a frenzy. But it'll tighten up, and then what happens? And the sellers can't sell as easily. Right now, the higher end already is tougher, so we're getting a lot of leads from the higher end because they just want something set up for closure, these sellers. So I just think that's going to get tighter and tighter, and so people are going to be flocking to non-conventional creative financing, which is the terms business, for sure. It's already happening.
Yeah. And then, with the and I know that because do you think the Fed is the Fed playing a different role now than it did in 2008, or has it just been 10x or accelerated? Because I've watched a guy on YouTube that talks about it, that basically the Fed's becoming the world central bank. That's what his opinion is. Yeah. And it's going around buying up everything. So how is that playing a different role now than it did in 2008, pre-2008?
I just think, well, I'm not an expert in that, first of all, just disclosure, but I think everything's different than '08 because what you said earlier, it's worldwide. It's not like segregated niches. It's the same reason. And the other difference is there's some businesses booming right now, right? That's the big difference there too. There's some businesses booming. There's some niches within real estate booming and some getting crushed. That's different. The interest rates are all-time low. That's different. So I don't know what their role is going to be going forward. I don't think anyone can tell you that for certain. So I don't render a guess there, but I can tell you that all those other things are different than '08 for sure.
Okay. And, moving forward with this, let's dive into kind of like what your niche is and specialty, because and how it's actually, if they can learn what this specialty is and how to do it, that they don't have to worry about too much about the Fed and all that stuff. They can actually pick up deals pretty good without any banks involved.
Yeah, I guess that's kind of why I answered that way too, because that's never a discussion we have on that note. Like we don't sit around and say, well, what if the Fed does this to interest rates? What if they do this? I just know that the banks are tighter, period. And if we buy on lease purchase or owner financing, and if we're available to be the guide for the sellers, when there's uncertainty, somebody needs a guide. Everybody needs a guide. So the sellers need a guide right now. They're like screaming for it. They didn't know if they should sell when it first happened. They didn't know if they couldn't get people in when it first happened. So when we go in and say, look, we can give you your price if we get the right term, and we can do that on a lease purchase or owner financing, that's a big win for them. It's a big win for us. And then it's a big win for the buyer we put in the home that thought they couldn't get a mortgage right now. And here's an example, Anthony. Last week, $1.35 million house in Colorado, one of our students. Gentleman gets qualified, pre-qualified for it, goes to the closing table, has 135 down, 10%, has 760 credit. Bank nixes the loan last minute. 760 credit.
Yeah.
They said he needs 2 years reserves or 2.5, whatever it was, and he's 25% down now.
Oh, wow.
So the same guy comes through us. We happen to tie the home up, sees it, comes through us, does it on terms. Closing this week.
Oh, awesome.
That's a win for the seller who said, man, you found the same guy. It's a win for the buyer, and it's a win for us. So I think that's going to be rampant as we go further into this, especially fall and winter.
Yeah. And then, you said something earlier about buying longer, right? You're looking for the long term. And when you buy by these terms, like you're not worried about like, in the next 2-3 years, it might drop because, in the next 10, it's going to be back up again.
Well, okay. So here's why though. Our model is such that whether it's lease purchase or owner financing, that we're getting the principal pay down throughout the term. And people might say, well, great, I get that on my house too. No, on owner financing, when they're free and clear, like this one I'm talking about, our monthly payments are 100% principal. That's different than your amortization where you get a brand new loan and there's nothing practically loan principal, nothing. So oceanfront home here in the area, a place called Cape Cod, $2,500 a month principal, $1 million home, $2,500 a month principal. You put that on a 10-year term at $30,000 a year in principal pay down, forgetting the markup, forgetting all the other ways we make money. That's like a $300,000 principal pay down if we don't get any extensions. So the market could drop 30%. It will be fine.
And you're not paying as much in closing, right? And obviously origination fees, any fees or nothing like that. So
no, and here's the punchline. We're not signing personally because after '08, I learned the hard way. That's why we designed this niche. So we never take out a loan and sign personally. So you're never going to have a bank coming to you and saying, put all your, we're taking your assets. It's not happening. And so now you have leverage. Now you can renegotiate with the seller, renegotiate with the buyer. There's no bank involved.
Yeah.
Difference.
So where do you think, where do you see opportunities coming? Like, if you're an investor or anything like that?
The higher end that I just alluded to, for sure. So we're actually, a lot of our students are going towards depends on what area you're in for high end, right? But going towards the $750 to say $2 million sellers who are kind of stuck right now with a very, very, very limited buyer pool. And they're happy as ever to get their price. As long as we can get them to go out at least 10 years, we're golden.
Okay. And a lot of these houses are already free and clear. Do you deal with anything that's, that has notes on it?
Yep.
I know it could get kind of tricky with that.
We do, though. So same logic there. There is no end term if I buy a house subject to, right? We just did a recent one, same area coincidentally, but the couple is going through divorce, 4,100 in arrears, nothing big. But we pay the arrears, put one of our tenant buyers in there with over 40 grand down. They're not going anywhere. We have this 30-year deal. I'm okay with it.
Got it. Very cool. So, I have a personal question because I have an opportunity, right? Market's up. I have equity. Let's say 1031. Our family has a good amount of property. How does that play out in this situation?
The 1031s?
Yeah.
Okay, so here's what I tell my students. They get asked this a lot. So say I'm talking to you and you were going to 1031 this particular property A. I say to them, okay, I say to you, your goal in a 1031 is what? To get as much as you can and move it into the next property, right? So then you can parlay that. Okay. So if that's the case, then you're going to get more selling with us on lease purchase. There's no question you're going to net more if you don't mind waiting. Now, why would you mind waiting if you're 1031 in that anyway?
Yeah.
Instead of 1031 now for say, X amount, how about get X plus and we'll do it in 2 or 3 years? Fact. I mean, you get more money if you can wait. The only person we can't help or deal with is someone that says, I need money now to go buy my next family home. I have to roll this in.
Yeah.
Hey, we're not your buyer. That's okay.
Got it. You're looking more of a reverse 1031 in that scenario, the first scenario you're talking about?
Yep. If you're talking about just 1031s, yep.
Yeah. Very cool. So if someone's looking to get started, like how do they, what's the first step to get started in what you're doing?
Yeah, I mean, for us, that we have like this simple pathways. You probably know from talking to Nick and Zach. They go through kind of like the foundational course that we throw everything at them. Like the book I sent you is A through Z. They get absolutely everything in the course, and then they can go do deals themselves, so they can team up with us.
Got it. Yeah, and mentioning the book, if anybody wants the book or digital copy of the book, just go ahead and put in the comments. We'll send over. We have new rules for real estate and real estate on your terms, and then we can send you over a copy. If this is going to be in the podcast, we can put a link in to how to get it in there. So, what do you think else should be on people's mind at this moment? Looking forward.
Well, here's something I say on every show. It doesn't matter what niche you're in. Now, I am biased to our niche during this time, but it doesn't matter what niche you're in. Do yourself a favor and do 3 things. 1, pick a niche that you can get behind. If it's terms, great. Love to show you. But if it's apartments or whatever it is you want to do. 2nd, find someone, especially now, that's doing what you want to do currently, because it's changed in 3 months. Never mind the next 3. So find someone that's where you want to be and currently doing it. Super important to be current. And then 3rd, this is easier said than done. Put the blinders on for 36 months. Don't get the shiny object syndrome with all the different niches you could do. And if you do that for 36 months, you're going to have a great experience.
Yeah.
Doesn't matter.
Focus, right? I mean, it's so easy in this space. I actually coach a real estate investor to, help him out with his business plan. He sells some education and stuff, and he's trying to build up an asset management company from scratch, and it's like, look, that's the key thing. Stay focused. I mean, it's a lot of things with, us dreamers, right? It's keeping everybody focused in the same path. So,
well, unfortunately in real estate, as you know, there's so many courses that say, get rich tomorrow. So they run from thing to thing and they never get it off the ground. Get rich long-term. Sure. Almost any niche if you stick with it.
Yeah. Okay. Hey, in your book, you talk about your 2008 experience. Like, what was the biggest lesson that you learned out of that? I mean, I know the terms about the personal guarantee. There's anything outside of that?
Well, the market's going to change no matter what. It's going to change now, and it's going to change in 7 or 10 more years. It just happens to be that that now it's ever changing, literally. Like you turn the TV on, it's different than it was yesterday. But I think that's the main thing. And that people say, well, how do you know sellers are going to keep wanting to do terms or get creative? Because the tighter the banks get, then the more they need your help. It's just going to grow and grow. And here's a rough stat. Like early 90s, the amount of transactions that were done outside of banks, non-conventional creative financing like we're talking about, 2 or 3%, maybe 4%. Now it's upwards in the teens and growing. I don't know what today's stat is, but it's growing rapidly. And that's why you have wholesalers, flippers, a lot of people jumping into the terms market. No question, because it's not weathering the storm. It's thriving right now. Yeah.
Absolutely. I'm on a few lists, and they've been sending out a lot more emails lately. So
yep.
Very cool. What do you feel like is the most important aspect of being a real estate investor? Like, what's the most important quality of focus someone needs to focus
on? Two things: the skill level. I don't care what niche again, right? The skill level. But here's the surprise, probably for most people. Anyone can teach, like if you do those 3 steps I said, anyone can teach the skill level. So why then do some people come out of the gates and do a deal in 30 days and some take a year? Like we just had a student take a year. Why? It's the space between the years. So one of the most important things you can do is if you're working with a coach or a mentor, and if not, find someone else that'll work on that headspace for you too. It's like people say, okay, I want to do $1 million my first year. I hear the deals you're doing, Chris. They're very lucrative per deal, and I want to do 10 of them next year. That's $1 million. Yeah. Okay, but you're going to become that person first, and it's all up here. So you got to work on that mental game while you work on the skill sets. That's the surprise for most people, I think.
Yeah, and we mentioned that become that person. So what does that even look like? I mean, I know that a lot of people won't have big goals. I know you're big into personal development. Your son has an amazing story, and actually during that, the biggest why I love that, it was like he was so fortunate to have your background going into his situation. If you don't know, his son had an accident, and they didn't tell him he can walk, and he ended up walking again. That's a short story that maybe we'll have him back on, but the things that you and your wife did was like there was no other option. There was I think you guys put up things on the wall and
affirmation.
And a lot of people would think that would be very that's kind of lame. That's kind of silly, right?
Yeah.
But you've actually proved it. How well it works and how well that is. So yeah, what does that mean to actually become that person, right? Because someone starting off is like, I'm here and I want to be there.
I love the exact example. So, and then I'll give you my 2 cents on it. But we just interviewed yesterday for our show, Ed Millette. I don't know if you know Ed, but he's like fastest growing 50 under 50.
Yeah.
Forbes, okay. Rather wealthy. Made all his money, made most of his money, told us, I never knew this, in terms, but in real estate. He's huge in social media, but you'll in other businesses now. But he said to us the other day, exactly what you just said. He said, people think it's foo-foo. People think it's, he said, you have to visualize, and you have to hang out with the right people to work on the mindset. He's doing tens of millions more than us.
Yeah.
And he's saying, you got to do that. That's a must. So what does that mean? You said, it means we all do. People have paradigms, money paradigms, mental blocks. They're there, whether you want to believe them or not. So it means working your way through some of that. So every time we have a coach, like you met Nick and Zach, whenever one of us have a coach that we're working with personally, we bring that person to the community. Because if we've had success with it, then they can too. We're only about that. Like what's actually practically working with us, we'll bring to the community. So you got to work on that development personally.
Yeah. That's having that clear head and that mind focused on what you're doing and none of that head trash in there is very important in that. So
we all have it, and we'll continue to have it. It's working with it.
Yeah. So tell. I know we talked about this last one on your show. Let's just revisit it. Your building, right? And it's a good example of how you bought your building and the situation on terms, right? And this is good for business owners to think of this I know with one of the things with when I had my gym, we had to move after a few years, because I was like, man, it was just way overpriced, right? I didn't want to buy it. But, what about with your building and how you bought it on terms and the benefits to having a business that's attached to it, right?
Yeah. So a few things, because if someone learned how to do terms, Anthony, to your point, and only did their own home or only did their own building, it's a win. If they never did it as an investment, they'll get the itch and want to do it as an investment. But if they never did, they get a win. So our building was on for, let's round numbers. I think it was like 500 something thousand, 550. And he was a for sale by owner, but he specifically wanted terms. So people say, well, why would someone? Because there's tax implications, there's cash flow implications. He's one of the largest landholders around here. He's not new to real estate. So we structured a deal. He wanted interest. We're typically not paying interest. So I said, okay, let's do this. And he went for it. He loved creative deals. I said, let's, for the first small down payment, we usually don't, but for our own office, we're happy to do it. So first down payment, and then for 9 months, principal only payments. So we took a 550 and got it down to about 490 just in principal payments. And then about 9 months later at 490, amortized that at like 5%. So he was happy with that. We were happy because we ramped that thing down 60 grand just by making principal payments. That's a win-win. And we did it over 20 years.
And it's in his mind, he just becomes the bank. I mean, right. If we look at this whole game, right, is eventually you become an investor or a lender, or you're using your capital to, expand your wealth. Right. Those of you who aren't into real estate, that he's probably like a dilemma, right? If you have a property and you've had a big appreciation on the property, and you go to sell it, you're going to have a big tax on that.
That was his deal.
Yeah. And the other part of that, it's like, it's challenging to go from, if you're just going to sell it and try to get into another property, if you don't have a previous property identified and going into that, you can get away with it tax-free. But the challenge is that exchange and having the timing right on your current property and the property you're going to get into all kind of, it's like, I don't know. It's like a symphony, right? Like getting that to work.
Yeah. So, so for the listeners, if you want to find one, like you and I are talking about, your own home or your own building, what do? Buy a list of free and clear for $100. There's a third of the properties in the U.S. are free and clear. So buy a list in your area. We did one once. We said, look, we'd like to get a 4 to a 10 unit. We did a mailing, bought a 6 unit, did it through an IRA. 32 months later, $500 deposit. 32 months later, 100 plus grand coming back in tax free. We said, okay, that was cool. That worked. So let's do another mailing. Did another mailing. Got a 4 unit. Same thing. You can find these. They're not hard to find. There's a list of people that are waiting for you to give them a ring and say, okay, I can give you your price, solve your ego issue, as long as you can go my term.
Yeah. And you mentioned IRA. We haven't talked about this on the previous show, but what are the benefits of using, your IRA to actually invest your property?
Yeah. I love it in the terms world because the example I gave you to prelude that, the ramp up is fix your cash flow first. Like do enough deals where your cash flow is like, okay, I can live with this. I'm happy. Then plow the rest into preferably your 401k or your IRA, self-directed. So that 6 unit was literally a $500 deposit. And then 32 months later, just by improving the NOI and the principal pay down we had, get 116 grand coming back at the closing table. So it's a self-directed Roth IRA. We can also do it in our 401k that's for the company. You can do those forever.
Yeah, and the beauty about that, since it's almost impenetrable. Like I did some courses on this, and one of the reasons why OJ maintained his wealth, because a lot of his investments were held in IRAs, and they're just a separate entity. They're not disconnected from him, so they couldn't touch that. And there's a lot of amazing, because it's that type of vehicle. You're like a lot of your capital gains isn't even. You're not in that world, right? Is that correct? In there?
Yeah. So what I choose to do is there's the self-directed, and then there's the self-directed. You can just have that self-directed IRA invest, quote unquote, in your LLC. It's not yours; it's your IRA owns it, and then you have someone else manage it because you can't touch it. But that's how we do deals without having to go back to the provider, the administrator every time saying, I need this investment. It's a bit of a bunch of hoops to jump through. So instead, do it once and create an LLC with the right help legally and accounting wise, and then just do deals in that LLC, and that's your Roth.
Yeah. Yeah, and you have to be careful because there's some you mess up a little bit and it's all
you're gonna get it. Yeah.
You're gonna lose it. So awesome. So what are you excited about moving forward?
I'm actually excited for the uncertainty, to be honest with you. I said to our team had an offsite yesterday, coincidentally, where we strategically planned the next quarter. And we all said, we're listing, the SWOT analysis, what are the weaknesses and strengths. We put on the strengths, COVID. We put on the weaknesses, COVID. Why? Because we don't know what's going to happen. So it's one of, I think it was Zach that said it's one of the best things that's happened to us, sadly enough, but really not sad because we can help so many families now, generationally, buyers and sellers that thought they had no out.
Yeah, absolutely. People can get into houses, maybe they haven't had a good financial past, but maybe they're into a market that's, a sector of the economy that's doing well, and they can get into a house, right?
Right.
And start building up their assets. So awesome. I know that you want to give away a book, anything like that. Anything else you want to sign off with, or how can people get a hold of you?
Just go to smartrealestatecoach.com. If they can listen to me babbling for 35 or 40 minutes, they can watch the free webinar. It'll give them more of what you and I are talking about. It's not going to teach you how to go make $1 million, right? I would never tell some of that. But keep digging and do your due diligence, as I said earlier, and then decide if it's a niche for you, and then let's get after it together.
Awesome. Well, I appreciate having you on, and we'll probably have to go through and have the family back on again. So
yeah, we'll do the circuit. Awesome. Thanks, Anthony.
All right. Talk to you soon.
Thank you, buddy.
This concludes another episode of the Be Battle Ready podcast. If you're looking to put it all together across all the areas of your life and be battle ready, come get connected with powerful leaders in our Be Battle Ready Facebook group, where we will be dropping new battles to win each day.